Welcome to the Driven to Succeed Real Estate Podcast. I'm your host, Brandon Olson, and my co-host, Terry Torito and Brett LaCoy. How are you guys doing today?
Pretty good. How about you, Terry?
I'm fantastic.
Yeah,
I haven't seen you guys in a while.
Right?
It has been a while.
It's good to be back.
Yes, it is. And today we are going to talk about the best thing that's going on right now in the market in real estate, right? Listings, the market supply, what's going on there, the sentiment, all of it, all of the above. And Terry, what did you say earlier?
Everybody said the world is coming to an end.
Right. It's all about
perspective.
Yes.
That's all I want everybody to focus on today is just perspective.
And 100%. So, we are trying to, find our way through what's going on in the market. People that have homes are looking at buying homes. They're trying to determine what is the right thing to do. A lot of people are getting the last minute, hey, let's sell it now, buy now. But then we have the rising interest rates, right? But what is one of the best times to buy homes?
Well, honestly, you kind of want a higher interest rate,
right?
Because you're probably the higher interest rate is actually going to be pushing the home price down. Then when rates go back down, well, now you got a lot of equity. That home is going to become more valuable, and then you can refinance.
Exactly. And you remember, you can marry your home, but you're not married. You can date your interest rates, right?
Yes.
So you only have to date it for a couple of years. Because I do, look
Get rid of her before Christmas so you don't have to buy her a gift.
A couple of years, I do think that we're going to have a higher rate through the rest of this year into 2023, maybe 2024. But I feel like based on what's going to happen in the economy, that over the next 6 to 12 to 18 months, that rates will come back down, right? Because I think they will. I think inflation will start to come down fairly fast because it's gonna push us into a little bit of a recession. So the people out there that, if you do have one of those jobs where it's pretty solid and you've been there for a while, buying a house right now isn't a bad time. Because guess what? So if we're gonna look at the market, we'll just dive into it. This is from Minneapolis area realtors. Our new listings has decreased a little bit month over month. But our change in inventory has gone up.
Right.
And we are starting to see where houses are sitting on the market for 2, 3, 4 weeks now, which is good.
Yeah.
It's still not anywhere near a buyer's market, but
No.
it's changing. You can get seller pays. You don't have to waive inspections.
You can actually think about purchasing this home.
Right.
You can actually go home, talk about it, do some numbers on it. You can actually, guess what? You can maybe even get an inspection.
Right.
The world is where it kind of supposed to be, I think, right now, where you can buy a house. You don't have to see it online and shoot from the hip and go, I'm going 75 over. Never even seen it.
Right.
Guess what?
Yeah.
Take your time now, the way maybe we're getting back to normal.
Compare a couple of properties instead of like, oh, I love this one, you got to buy it.
Without seeing it.
It's
Right.
it's not to the point of where it popped up 2 hours ago. Well, they already got an accepted offer.
Yeah, right.
It's not like that anymore.
Yes. And, going back to the whole interest rate, rates are in the upper sixes right now for a 30-year fixed mortgage, mid to upper sixes. In some cases, we can get some ARM programs that give you a little bit lower rate. There's cases where you can get sellers to pay closing costs, where you can use that money towards buying down the rate, So, getting into ARMs becomes a sticky situation too. So, if it's a 5-year ARM, a 6-month turn, so every 6 months it can reset, or 10 years and so forth. So, a lot of people, there is some stigma about ARMs. There's pros and cons about all of it. So you just have to talk to one of us to understand, like, how does it work? What's the best option? I still like the fixed rate option.
Sure.
In reality, you typically don't keep your mortgage for more than 10 years. Specifically, first-time home buyers don't.
Right. Your first home is generally not going to be your forever home.
Right.
Just period, end of story.
But let's say a couple years from now, you are able to refinance that home into a lower interest rate, and maybe get rid of mortgage insurance and do whatever. Maybe you're buying it as an FHA, and then 2 years from now, you're able to get into a conventional loan.
Right.
If you are going to stay there.
And if you have 20% in that, I mean, that private mortgage insurance, that could be that could be huge for your monthly
Be
payment.
$100 plus $150 a month.
Yeah.
You just saved. Yep.
Absolutely. So if you're looking for a change, you want to get closer to work, right now is not a bad time. If this is going to be a home that you're going to live in a longer period of time, it's definitely worth shopping, getting into.
And I think, the thing too that, I think that we have a problem with as a society is we are so short-term sighted.
All right.
Let's start looking a little bit down the road. What is it going to be like in 3, 4, 5 years? We know we have this going on right now, but that shouldn't be a deterrent. This house, it's going to be where you raise your family, but it's also an asset.
Right.
What?
Pay yourself first.
Yes.
Pay
Right.
yourself first. It's as simple as that. Like, pay it yourself, not to the person you're going to rent from. And someone just said a simple math the other day. It's like, think about it. You pay $1,500 a month rent. I'm going to wait 2 years. Guess what you just paid out? Not to yourself.
Right. That's like $36,000.
Yeah.
If I'm doing the
that
math
just
really
went to
quickly in my
someone
head.
else instead of you.
And it's 100% interest rate.
100% interest rate.
Right.
That's a pretty good rate.
Yeah.
So I was like, think about all of that. Just you don't have to have your dream home right away. Unless you're made of money, fine. That
Right.
person doesn't even have his dream home right away. Build yourself to your dream home.
Right.
Yes.
But just pay yourself
But,
first.
and build yourself into some equity position, because let's face it. I mean, the amount of wealth in the United States majority comes from property, right?
Yes.
It really is.
Is it like 70 times your value is? I mean, it's like a ridiculous number. It's
from
like
a rental
from a
stand- from a
renter
renter
to
standpoint.
a homeowner. As a homeowner, you more than likely have 70 times more wealth than someone who just rents.
yeah.
Correct. And some people, I've run into people where they just like to rent.
They
don't want
Sure.
to have to take care
They
of a
don't want
light
nothing.
bulb that goes out.
They don't want nothing.
Right.
Right.
And
You
guess
know,
what? If
that-
you're not ready for it, fine.
So-
But I don't know. I'm like, you can always hire the neighbor kid to mow your yard, dude.
Right. Right.
I'll come mow your yard. How about that?
Right. Well, and the other thing too, that I like to put out there is, nothing's to say that rent's going to start going down either.
Well, you brought up a valid point. So we still there's two things that are key indicators. So we're going to go through some rough times, right? But the two big indicators right now are the jobs report, right? There's still jobs out there. And the, I lost my train of
You
thought.
lost your train of thought was on a runway.
right, right. So the jobs report. So in Minnesota specifically, we have a lot of Fortune 500 companies, right? So we have very good jobs here. So different markets are going to suffer more than other markets.
Yes.
Right. It's still a housing supply shortage.
Yes.
There's still a renter. I mean, regardless of the situation, people need somewhere to live, right? So
Right.
will rent prices, when will rents go down? Because the rent prices also increased. That's the other thing from buying a house. Like,
Right. Well,
The rent can increase every single year on you. They can move you up every single year, at least.
because guess what? These investors that own these properties, their taxes go up.
Yeah.
their taxes go up, and if they're buying a mortgage right now, their interest rate is going to be higher, their mortgage payment is going to be higher. Guess who's going to be paying that?
You are.
You are.
100%.
Right. So the cost of living is still going to go up. There's still a shortage of homes. Like, we still have the shortage of homes from the 2008 crisis, right?
Yes.
That was, this isn't because of the housing industry. This is more of an economy-based, potential that we're looking into. It's not because we have this overabundant supply of homes. We're way
People are
under
living
that.
longer. People are living longer. There's not enough 55 and older places being built. So people are like, I just had to talk to a gentleman the other day at my mother-in-law's 55 and older place. He's like, I come here to see my mom, but I'm not selling my house. I got a good rate and it's paid off. Or it's paid off. Why would I want to spend $6,000 a month here? And I'm like, I hear you.
And think about what COVID did to that.
Yeah.
So COVID changed a lot of that simply for the fact that, they put a lot of people that had COVID into these nursing homes, and they scared a lot of people. They're like, I'm not putting my parents into a nursing home, right? So, also all these little companies that came up, all these PCAs, the in-home services, home health care. It's like, well, man, I can, for the cost of going into a nursing home or having somebody care there, it's not that much difference, right?
Right.
So now people are like, they're staying in their home.
Right.
They want to stay in
Right.
their home, right? So now those homes that we're going to, a lot of times they're going to first-time home buyers, right?
Yep.
They're going to
That
first-time home
1950s,
buyers.
40s, 30s homes.
Right.
They've been there for 30 years.
Right.
Yeah.
Yeah.
So people are staying in their homes longer. You know, they weren't building enough. You know, the builder sentiment is down a little bit because their uncertainty of it. You know, and the cost of the land is,
Oh,
a lot.
land,
prices
materials. I mean,
have gone up.
everything is just
So-
high.
Hopefully this inflation, like I said, there's always a little, there's a plus side to everything, and it's hard to tell people that. Like, listen, this kind of has to happen for this
Just
to happen.
right?
You know,
Well,
it's-
and that's just it. You know, it again comes down to it's hard to see past it.
right,
Right.
because it's such a, it smacks everybody in the face so hard.
Right.
Right.
Because a guy argued with me again the other day. He said, well, last year. And I go, dude, last year, just you got to get it out of your head right now. Because guess what? It was a pandemic. That's why it was that low. We may never see that low of interest rates, maybe ever.
Right.
No,
Maybe
right.
ever. In
you
our
know,
lifetime.
Yeah.
And to be
Yeah.
clear and to be really honest, they should have never got that low.
No.
No.
They,
No.
I, in my opinion, and I'm just going to throw this out there, they should have relaxed the buying of bonds way before. So when we talk about loans, how does the loans work? How do interest rates, when the Fed Reserve said they were going to raise rates, does it always affect the mortgage industry? Not
No, not
necessarily.
necessarily.
Right? So the reason why is because mortgages are, backed by bonds. So when a lender buys your mortgage, or they package it and put it into bonds, right? So the MBS, the 10-year Treasury, is kind of what dictates that, So, but yes, it does directly correlate, but not always.
But not
right?
always.
So when COVID happened, they started, putting $40 billion a month into the bond program, right? So that's what drove rates down.
Right.
In the middle of 2021, rates were 2.5% for a 30-year fixed mortgage. I mean, if you got that, yeah.
Yeah.
Do you want to go to a 6.5, 7?
That's a problem because now we have folks that don't want to sell or move on, after a few years, because why would they give that up? So now that's actually adding to the inventory shortage, which is keeping prices high, making it a little bit harder. But again, it's not all bad, guys.
No, it's not all bad. You
No.
just got it. There's always a plus side to everything. And like I said, it comes down to it. If you're renting and want a home, it is the most still beneficial thing for you to do is own a home.
Right.
Yes.
And we've, it wasn't too long ago we lived through a housing crisis. It was 08, so
Yeah.
there's a lot we learned from 08, right? The mortgage industry is specifically
We learned the most.
If you got a home today in the last 10 years, you had to work to get approved. It wasn't like, oh, hey, I just put a number down on paper
Yeah.
and I can buy this
It was-
$500,000
Yeah,
home.
It
Tell me
wasn't
how much you make over the
I can
phone.
fog a mirror. Yeah. Right. Well, and I think that's another thing too that a lot of folks kind of need to understand is the 08 crisis and what's going on right now, some of the correction that we're seeing, they're not related.
No.
It's not for the same reasons at all.
No.
It's completely different.
In 08, Arizona is the first place. If you watch, is it The Big Short? And they're driving around in Phoenix, and they're every 1 out of 5 houses are occupied, right?
Right.
And they were $300,000, $400,000, $500,000 homes, and just going just like this is crazy. And that's where they were really putting numbers to paper, and that's how they shorted it, right? And that's how Michael Berry got his name known, right? Got the movie made, right? But you don't have that today,
No.
right? And it's a completely different animal today. So, going back, it is in my opinion, if you can afford it, it's definitely, we'll look at the best options for you. It's our job to find the best financing terms available to you. That's what all mortgage lenders have to work around the same rules.
Yep.
Back then in 08,
Oh.
prior to it, they
You could make
mark
up your own
Oh,
rules.
yeah. Let's try this.
Somebody was a 640 credit score, and they said, "Hey, we can take 7%." When somebody else could get 5.5. You know,
Man.
it is what it is. So they could do that. They could make that spread, and guys were, you know, people were, and that's why the industry changed.
Yep.
You know, so it's completely different today.
Stay within the lanes.
Yes.
Right.
Yes. So, you know, now you have that ability, to reiterate, you have that ability if you are going to home shop, now you have the ability to be a little more pickier,
Yes.
ask a little bit more, and so forth. So,
Maybe go look at it 1, 2. You might even be able to go see it a third time.
That's true.
It's
Right.
true.
Yeah.
You know, like I said, you can get that inspection where so many, like there's a lot of lawyers making money right now because of the people who passed on that inspection, and all of a sudden you found out, oh, this was wrong with it, and this was wrong with it, and this was wrong with it.
And none of it was in the seller's disclosures.
Right.
Yeah.
So
Right.
guess what? Get that inspector if you can. It does help you.
Right.
so I guess, you know, on that note, I don't know if there's a whole lot more we need to go into this, but
No.
you definitely have options today. You know, contact any one of us if you have any questions, or you know, if you have, we have some really good realtor referral teams out there.
Yeah.
That we can refer you to really put real numbers on your properties and what they can expect. Every area is different too.
Oh,
You know,
for sure.
there's still some markets where it literally is still multiple offers.
Yep.
There's other markets that it's not. You know, so it's a little softer in places and so forth. But you know, definitely, you know, I think the sooner the better. The way the Fed came out said, you know, they're going to keep raising interest rates.
Yes.
So,
Till
you
it
know,
stops.
you do have options out there. There's lock and shop. You know, we rolled out a lock and shop program as well. So you can lock. You have 120 days. You can lock in the rate. So plenty of options out there. It's our job to find the best options for you, guide you along the way, and make sure that you are ready for the purchase
Right.
and moving forward.
Yeah.
Great.
Cool.
Awesome. Well, thank you, everybody. Bye-bye. Bye-bye.
See ya.
See ya.